Big shout out to Prime XBT for sponsoring today's video. If you don't know who Prime are a platform where you can not only trade crypto, but you can also trade FX, commodities, and stock indices. And the beauty of these guys is you can use crypto, either Bitcoin or USDT, as collateral to trade against these pairs. If you want to find out more about them, then check out the links down in the description. And if you do want to trade with them, then use our codes below to get up to a 7,000 USDT deposit bonus and 25% off trading fees. So thanks once again for sponsoring today's video. Good morning, gang. Good morning. Welcome to this week's Bitcoin update. First and foremost, remember, nothing discussed today is financial advice. I'm not a financial advisor. It's just for educational purposes only. And now that's out of the way. Welcome bulls. Yeah, bullish Bitcoin. You know, from the lows, we're up 60%, give or take. You know, a decent move. And obviously, if anyone caught that swing trade from the lows, then well played. Pay yourself, take some profits, because we're now coming up into significant resistance. So let's take a look at what's going on right now. So first and foremost, let's throw on our range fib tool, and obviously we can get an idea what's going on. So obviously this range is going back from the June lows, back from last year, so it's a very, very old range now. But it's a high time frame range, and it's time to pay attention now that we're coming towards the highs. Right, so is this the time to start getting overly bullish? No. This is a time to start paying yourself on any longs that you've got and potentially looking for opportunities for short trades. Okay, that's as simple as it comes. So what we can see here is we had last week, on last week's video, I was talking about, in fact, let's find out where we were on last week's video. So this would have been last Thursday here, coming back down here, and we're hovering down here again. And we're creating this little sideways range. Now, bear in mind, we're looking on a daily time frame, so if we zoom into the 4L, we can see this a little bit better. And we can see here, we're just forming this little range here. And as I was saying to you in last week's video, and I'll leave a link at the end of this video, then we were looking around this EQ, and we were looking at this consolidation below it. Okay, now we knew that there were a lot of eyes on this level. Because even the morons of the space were eyeing up this and drawing some crazy line here. So in a sense they were right, and they could spot this a mile off, but what happened is we didn't actually come back into this resistance. We just back tested this EQ perfectly. So for me, and as I was saying to the team and the private group, you know, this is an acceptable opportunity for a long, and lo and behold, we got the longs up to the top of the range. Okay, so from an Elliott wave perspective, this is something else that we've been looking at the moment. We're looking at potential for, quite simply, this being a wave 4, and then we're looking for the wave 5. Okay, so now can we confidently say that we're out in a 5? Well, it's building a good case for that. Now the big question is now, where does the wave 5 end? Okay, so does it end where it is here, or does it go higher into other resistance zones? We'll have to wait and see, won't we? But it's something to keep an eye on. And anyone that understands Elliott wave theory will know what happens after a 5-wave impulse. Okay, if you don't understand what happens after a 5-wave impulse, then I suggest that you come over to our website and first and foremost come into our free Discord, which is this link here, and you'll pick up a load of free alpha in the free Discord. There's loads and loads of charts shared, but if you really want to take your learning to the next level, then come join our Copilot's course. And within our Copilot's course, we have a full section, a full video series on Elliott wave theory. And Elliott wave theory is probably one of the key things that you can use when it comes to high time frame swing trades and understanding where the market is likely going to go and where it's likely going to react. Okay, so something to keep in mind. If you want to learn Elliott wave theory, come over here, and you can learn all of this for the grand old price of 60 quid. Okay, so I'm not charging you an arm and a leg. It's not going to break the bank. 60 quid, you can get over 80 hours worth of educational content. Okay, so potential, we're in the wave 5 now. Now again, we don't know if that's going to end, so that's one thing to note. Okay, so that's how we caught this short-term play here. If we go into the charts here, the guys have been absolutely smashing it recently, which is, it's just been awesome to see. Catching up on the volatility, it's just been amazing. You know, absolute credit to the guys in the group. They've been smashing it. And as we can see here, this is the trade, one of my trades from the queue up towards range highs, and for me this is an acceptable take profit to front run the overall range highs. Okay, this was the other trade as well that we were getting from down at the lows based on the outward deviation, and again locking in some more profits towards range highs. This swing trade here, as I have been taking regular profit all the way along at key points of resistance, and that's what you really need to do in this game. You know, it's not a case of just buying it and then holding, hoping for new all-time highs, because there's a significant amount of resistance ahead. So we take profits, and then if we get an acceptable pullback, we can add back into those positions. Okay, so that swing position from down here, once we've seen a completed wave 5, I will then be looking to add back into that position if I get my entry criteria. If price just continues going up, quite happily I'll wait for a new range to form and then I'll add back in. If price starts coming back down in a 5-wave move, then we've got to question whether the low's in or not. Okay, so that's what we're looking at right now. Let's throw it on a volume profile, like we always do. Now, yesterday, if you follow us on Twitter, then you will see that I was talking about coming up into this value area high once again, and I was saying this is significant resistance until proven otherwise, and lo and behold, it's nice to be proved wrong, and it just blasted straight through. Okay, so one thing you got to take in mind is, you know, not all ideas play out. We got zero reaction here, so quite simply, no trade. We continue going up. We did have some other key ASR levels here where I actually did take 2 losses yesterday, and I'll hold my hands up and admit when I take a loss, because I'm not full of bullshit like some of the other guys out there. So I did take 2 losses yesterday, but the winner more than made up for it. Okay, so what can happen next? Well, first and foremost, we are at a key zone here. We are at the macro range highs. Okay, so a couple of plans that we need to be aware of. Okay, if we do continue up, take out the highs, take out the liquidity from here, swing failure pattern, back down, back under, and you've got a very simple short trade, because all you're doing is just trading this range. Okay, we're range bound until proven otherwise. Okay, and that's how I will always see the market. Unless we start significantly impulsing higher, then I'm not going to get overly bullish. I'm not going to get overly bearish. We're just range bound. I'm trading the key levels on the chart, the places on the chart where price is likely going to react or turn around. Okay, if we get no reaction there and price goes higher, then I'm going to look for my first standard deviation, which is up here. And as you can see, this range fib tool that I give out to the co-pilots in the private group catches deviations very, very well. Okay, this is why I created this tool for the guys. So if we get no reaction at the range highs, then I'll be looking for these outward deviations. Okay, once again, it's for a take profit on longs potentially if there's a reaction, and if you do get a decent change in market structure, then we can look for fresh shorts. Okay, and now is that a fresh short and we're going to go to new lows? Not necessarily. Nobody knows that. Nobody can predict that. All we do is we'll get fresh shorts. We might come back to the top of the range and continue up. Okay, or it might get acceptance back into this range, then you'll be looking back down at value. Does it get acceptance back into value? No. Yes. If so, coming back down towards your EQ. We're just playing it level to level. Okay, now what if it becomes higher than this? What if the FOMO really kicks in and all the breakout traders actually get paid for once and it continues higher? Well, quite simply, we're just looking back at this old range, this old macro range. Okay, so one thing we can see here, this outside deviation lines up perfectly with this value area low. Okay, so this is a key level in my eyes, very key level. If zoom in a little bit further onto the weekly time frame, if price does pump up and we get acceptance back into this value, then quite simply we're back to trading this old range. Now there's many SR levels within this. Okay, if you really want a detailed breakdown and you want my trading plans, then come and join the co-pilots, because I give my daily breakdown every single day on what levels I am watching. Okay, so if we do get acceptance back into that, it's very important to know all the individual SR levels that's in this region, because there are a lot. There's a lot of resistance to get through. Okay, but you're back to trading that if you get acceptance back into that value. If you don't get acceptance back into that value, then again, you've got an easy short trigger. Okay, But one thing I will not be doing is I will not be trading a breakout of this current range, because it's not how I work. My system says don't trade a breakout, because breakout trading has one of the lowest hit rates in any form of trading. So it's, if you do get this, then all I will do is continue holding on to my swing longs. Okay? Not interested in catching a breakout trade, because that's when we can see trap traders and potentially a reversal. Okay? It doesn't have to happen that way. It's all about statistics, but it's not my way of trading. Okay? I know there's a lot of people out there that are looking to break this 25k region, and then they're going to start deploying their main bag holding. Okay? So if that's part of your plan, then, you know, do what you want to do. And it's quite simple. Your invalidation's down here. But for me, from a risk to reward point of view, it's just not sensible. What happens if we start to roll over? Well, if we start to roll over, first and foremost, we need to look back at value very high. Do we get a reaction there or not? Or do we get acceptance back into value and price rolls over? Well, if we come back down to the EQ, then I'd want to see something different, because we've already backtested this EQ perfectly. So what we could be looking for potentially is the liquidity grab from here, take these stops, and then continue the move back up. Okay? If no reaction there, let it roll over, back down towards point of control, value area low. Okay? And then further below that, then you're quite simply just looking for overall range lows, and then you're coming back into this consolidation here. If that doesn't hold, it's just as simple. It's level to level. You know, what do you want to see? What do I want to see at these levels? Well, quite simply, I just want to see a change in market structure. If price is pumping up, and then we start coming back down, low, high, lower low, break that, then you're looking for that. Okay, your invalidation is quite simple. It's above the highs. Okay? That's what I mean by changing market structure. And that's only one type of trading that I do. There's many, many forms, because I do rely on order flow quite a lot. Okay, on the footprint charts. And again, if you want to learn that, then come join us in the group. So that's it. It's, you know, control your emotions. It's not a time to get overly excited up here. Yes, price is pumping, and this is where FOMO really does take over, and you can see the greed in the market already. You know, but at the end of the day, we are still range bound until proven otherwise. Okay? Range highs, not a time to get bullish, just like range lows, not a time to get bearish. Okay? Level to level. Keep you cool. Keep your head on straight. Right, gang. That'll do. If you've enjoyed today's video, make sure you hit that like button. If you've not subscribed, then why not? And until next time, catch you in a few. Bye-bye.